Okay, hello everybody. Welcome to Korean Atlanta Mentorship here with another Velocity Banking review. If you're new to this channel, I just want to let you know that I have plenty of videos where I can show how mortgages can be paid off under 3 or 4 years. And I was wondering, is the world ready for this? I'm not sure because, when I see what the world wants to see, especially in Ryan's world, it seems like they don't want to see how mortgages can be paid off under 3 or 4 years. Maybe most people just wanna see unboxing of toys by little kids. I think this guy's like the richest YouTuber, Ryan's World. I was looking at the most popular videos of this cat, and, right here, 2 billion views for opening up eggs in an inflatable water slide, 1.2 billion views of a giant Lightning McQueen egg. If you don't know what that is, that's from the Disney movie Cars. And then 477 million views for doing the alphabet. Oh, maybe the world isn't ready for this. I don't know. Maybe that's why the banks get so shocked every time I talk about what I'm gonna talk about now. Is that it? Or maybe I'm just a terrible internet marketer. All right, well, let's go ahead and get started. Velocity banking. The reason I started looking into Ryan's World is because I got those YouTube videos, those recommended YouTube videos like Ryan's World is crumbling. And I was like, what's Ryan's World? Well, I knew what it is, but I decided to actually watch some of those videos, and it is insane how some of these videos get so many views. In fact, if I go into shorts here and I go into most popular, the most popular video is just this little girl skateboarding down the steps. Like, it's just, like, it's not one of those Tony Hawk type, wow, this is impressive skateboarding. It is literally just skateboarding for the first time, 2.3 billion views. And I'm like, yeah, though I don't know if the world is ready for paying off mortgages under 3 or 4 years. I think, it's not my world, it's Ryan's world, unfortunately. But it's okay. For those who want to enter the world of financial freedom, we'll go over velocity banking. But it is Ryan's world. It's not my world. All right, well, let's go ahead and get started. Velocity banking, what is it? It's a debt payoff strategy where you throw all of your money into debt using something called a line of credit. And I'm going to talk about the part that shocks banks, right? Because there have been certain instances where I've been trying to deal with banks after implementing the strategy. And by the way, if you don't know who I am, I paid off a mortgage in 2 years and 9 months, July 29, 2024. So amount zero, lien position one. I've done a lot of cool things. I'm not the most amazing at this, but I've done it enough where, uh, excuse me, a little burpee in my what do you call it? Insides coming out. But yeah, I've been doing over 1,000 videos, so hopefully I have the credentials to know what I'm talking about. And I also have over $739,000 in lines of credit and credit cards, which I'll go over a little bit later. So velocity banking, what is it? Basically, it's a way to pay off debt. And the way that I like to present it here is if you have great income and you have lots of debt with that great income, right? So let's say you have 10 credit cards, an auto loan, and a mortgage, and on top of that, your personal expenses, which is your food, gas, insurance, and all that other stuff that you always have to pay for. Do you need to make more money to comfortably get out of this debt? And everybody will tell you, yeah, yeah. I mean, look, you only have a penny left over, right? You only have a penny left over. How could you not have to make more money? And that's kind of the whole point of this is that we're going to become a little bit more financially efficient without having to necessarily make more money. Okay. But I'm going to tell you something, this strategy actually scares banks, especially if you're trying to get loans or additional financing, because the first step to doing this is not saving money. Okay, not saving money. So if you take a look at my checking account, you see that money comes in and then it's a zero. And so when a bank sees this, and let's say I'm trying to get a loan, right? Let's say you're trying to get a loan for a bank and they see that you have $0 in your checking account, they'll be like, what's up with that? Right? Like what's up with that? Especially if you trying to get like a real estate loan, they'll look at that and think like it's the most, insane thing ever, right? But that's kind of like the first step to doing velocity banking, which is not having any money in your checking and savings. And in fact, the way that I would explain this is that here, your checking and savings is seen as like the final destination of your money after you pay all your bills, including your debts. Whereas with velocity banking, the checking account is seen as the middleman for your money. You use it to receive and send money, but in for most cases you're not going to have any money at the end of the month, right? And the way that we're going to do this is we're going to put our entire paycheck into something called a line of credit. So what is a line of credit? It is a financial tool where you could borrow money, pay it back, and then use it over and over again. So, for example, this is my home equity line of credit for $373,500. And basically, if I go to the bank's website and I just click a button similar to this, where I just click transfer funds from that line of credit, it'll just dump it to my checking account instantaneously and then charge me a daily rate of 8.5 divided by 365. So basically, 8.5% annual, excuse me, I got burpees in my insides, annual interest rate. Okay, so that's how it works. Really easy. It's just a way to dump cash into your checking account and borrow it easily, and then pay it back and then use it over and over again. Now, a credit card is a line of credit. A credit card is a line of credit. Okay. So, but the thing about credit cards is they're a little bit inflexible, because I can't use it to pay loans or it's very hard. I got to use like plastique, or I got to do cash advances, which is very disadvantageous, because I might have to wait like a couple of days and they might charge me a $40 fee for using that cash advance. But I do have a ton of credit cards too. So if you sum them up, I have over $739,000 in lines of credit. And here's the secret to getting all these lines of credit, right? Is that banks don't lend money to people who need it. Okay? Because people who need money don't pay you back. TLDR, long story short, right? And so the way that I got all these lines of credit is just by simply going to banks when I didn't need money, and so that's how I did it. But here's the thing: we're going to assume, even though we need money here, we have a free and clear line of credit, free and clear line of credit. Okay, so how do we do this, right? So basically what we do is we use a formula called the cash flow index, right? So basically you take the amount of the debt divided by the payment, it gives you a ranking, right? And so the lower the ranking, the more bang you get for your buck, whereas the higher the number, the less bang you get for your buck, right? I mean, which one would you rather get? Pay off 220,000 to get $927 back in your cash flow, or only pay 35 grand and get even more than that, $1,100 back in your cash flow, right? Which one gives you more bang for your buck? Okay, well, I mean, simple, right? It's simple. Okay, so yeah, and so basically, what we're gonna do is take all these low ranking debts, okay, and what we're gonna do is move them into a line of credit. And so that's, I believe it's 167. So 5, 8, 15, 27, 30, 7, 10, 35, 12, 15. And then I'm just gonna do this right here. So it's 164, my bad. So it's 164,000. Okay. So once I do that here, guess what happens to these payments, right? 0, 0, 0, 0, 0, 0, 0, 0, 0, right? And so when the bank sees this, because they're only looking at your liquidity through this number rather than how much funds you have access through as a line of credit, they think that you're broke, or they think like, how are you going to get funds in an emergency? Well, sir or madam banker, all I gotta do is just click this transfer funds button from the line of credit if I need extra cash, but I'm using all of my cash to pay down the debt. But the bank doesn't see it that way, right? So that's why they get really shocked when you tell them that you don't, have any money in your checking and savings, and they'll be like, "Well, what if you needed money in an emergency?" And it's like, "Well, let me just click this button." And then they act like they can't do it. But even though it's their own product, right? So I don't know what's going on. And sometimes these are bankers with more than 30 years of experience and been in regulatory uh, agencies, I think. I think that's what that gentleman told me. I know he told me he was more than, more than 30 years experience, and he's been involved in regulation. And folks, there's nothing illegal about this. That's how their products work, right? The thing that it may be illegal is if you try to get, or it definitely is illegal, is if you try to get a line of credit under false pretenses, right? You need to get a line of credit and be honest in doing it and get it when you don't need the money. Okay. Don't try to get a line of credit by lying to the bank. It's going to bite you in the butt. Okay. All right. So now, right? So let me just kind of put it right here. The bank is shocked, right? I mean, that's like the clickbait thumbnail of this video. Okay, the bank is shocked that you would do this because when they see this number, they're thinking like you can't get money if you need it. And I was like, what are you talking about? We get it from the line of credit. And so what we're gonna do is we put our entire paycheck into the line, take our expenses out, and rinse and repeat over and over again. Right. And this has only come up every time I try to get additional financing for, purposes, things that I needed to do. And then, they always say like, we need 2 months of checking accounts. And I'm just like, oh, balls. I don't have that, right? And usually I get denied, but luckily, um, I have over $739,000, so hopefully I won't get a loan, but I'd still prefer to get a loan in some instances, right? Not a bad thing to get a loan, especially if you could get a really cheap interest rate. But sometimes those origination costs can kill you. All right, so now to get the next month's balance is basically previous month's balance, previous month's interest minus our cash flow, 5110.84. And then, of course, there are interest costs for using the line of credit. And then what we do is take the average daily balance, multiply by the interest rate, and then divide by 12, right? And then after every single month, we got to pay the interest, but the next month's balance always includes the previous month's balance interest, which is why this is highlighted, right? So we're gonna go ahead and do that. And then this is month 37, right? So in 37 months, we paid off the debt, right? So 37 months, and I'm gonna do this. Uh, so 164K. I'm gonna just do this. And then now what we need to do is pay off the auto loan and the mortgage. And this is going to be really easy. Look how quick this is going to take me. I have this loan calculator right here that tells me the current balances of the loans when I put in the current month. And look at this auto loan, $6,000. I use a cash flow index again, and then I move it into the line of credit. And I just do this right here. And then this is going to be plus 6869.96. And then you see by the next month, the balance of that debt is gone. And I'd even increase the cash flow, right? So if we increase the cash flow, now our cash flow is increased by about $300. Okay. So now at 38 months, because it only took us 1 month to pay off that auto loan, that'll be 164K plus 17. And that's going to be 181K. And then on this 30-year mortgage right here, so there's gonna be 38 months, right? So this is the current balance of that 30-year mortgage. We just can either chunk or just pay off the mortgage directly with our extra cash. Excuse me. I don't know why I got a lot of burps today. But as you can see right here, if you look at this velocity banking calculator and do something called chunking, which is moving the piece of the loan into the line, it'll take us less than 3 years to pay off the debt. Okay, 2.9 years. And so look how easy that is. And if I do 38 divided by 12 plus 2.9, hold on, divided by 12, that's going to be 6.07 years debt free. All right, 6.07 years debt free. And we paid off a mortgage in 2.9 years mortgage free, right? And so here's the thing. If you pay off all of your debts, right, and then you're trying to get additional financing, so like you need a $300,000 loan for whatever reason, business purposes, right? They're going to look at this and think, "Oh my goodness, you don't have reserves, even though you have this huge $260,000 line of credit available that has no balance. They're like, you can't, you can't. And what if you need emergencies? And then they just, I don't know. Like, does anybody train their employees anymore? You know what I mean? Am I the only one who feels like every time I deal with the business, nobody knows what's going on, yet somehow that business still survives? It's amazing. I think, the lockdowns in the early 2020s should have told us that most, this economy doesn't even rely on most people to survive because nobody knows what's going on. Anyways, I'm not here to offend anybody, or maybe I did by accident. But maybe I'm just pissed because it's Ryan's world and not my world, where I get billions of views for showing how to pay off a mortgage in under 3 years. No, I'm just kidding. I'm not bitter, but maybe I've been barking up the wrong tree. I've been barking up the wrong tree, and I need to just kind of open up toys for YouTube and sing the alphabet and not pay off a mortgage under 3 years. No, nobody cares about this. All right. Well, I'm not bitter. I swear I'm not bitter. I'll take what I can get. Right. I paid off a mortgage under 3 years and 9 months, so I'll take what I can get. I think that's good enough for me. Okay. Okay. So if you've made it to the end of this video and you want to let me know you made it to the end of this video, I'll tell you the secret code. Just type in the comment box below. This is not Ryan's world. All right. Just type that in. This is not Ryan's world. Oh man, what am I doing? I just, you know, it's amazing what gets views, and something like this, um, 2.9 years mortgage free. It's like, who cares about that? All right. Hello, is anybody there? No, I'm just kidding. All right. No, I'm not bitter. I'm not angry against Ryan. Child actors have their own sets of issues, but I think it's cool what he does. I think him getting excited and opening up toys in front of a camera. I think that was probably our dream when we were like 5 years old, and then probably want to grow out of it when we were like 11 or 12, right? All right. Okay, well, that's it for today, folks. This is Korean Lanta Mentorship here with another video. Have a great day and see you on the next video.